Welcome back to your channel Capital Compass. Recession fears are rattling the globe. From Hong Kong's massive dip to protests erupting in the US, it's chaos out there. But what's this? India is holding strong? Despite a global sell-off triggered by fears of a recession and trade war escalations, India's Nifty has managed to close above 23,000, making it the second-best performing market worldwide. Hong Kong crashed by 13.6%. Yes, you heard that right. Yet India stands tall, even after the government hiked petrol and diesel excise duties, a move that usually dents OMC profits. BPCL and HPCL saw barely any rally, but the bigger picture shows that investor confidence in India remains intact. Meanwhile, in the US, over 450 protests have erupted, targeting Trump's controversial economic policies. His tariffs on China? They're backfiring, sparking not only global inflation worries, but also internal dissent. Even Fed Chair Jerome Powell is pushing back. The economic tug-of-war is real, and businesses are hesitant. Why? Because no one knows what Trump might tariff next, and that's not a great environment for growth. Now, is this recession or stagflation? Let's see. The probability of a recession has jumped from 24% to 60%, and some experts are throwing around a scarier word, stagflation. That's when inflation stays high, but economic growth flatlines, a worst of both worlds scenario. Yet, historically, markets bounce back from downturns, and smart investors are already hunting for value plays. One sector to watch? India's dairy industry, poised to gain as global tariffs disrupt traditional supply chains. India is exploring separate trade agreements to sidestep tariffs. If successful, this could create a massive advantage. But let's be clear, volatility is still high. A short-term bounce may happen soon, but this might be more of a dead cat bounce than a true recovery. Sectors to avoid for now? Export-heavy companies, especially those reliant on U.S. demand. The metals and jewelry industries are hurting. Aluminum has plunged from $27.50 to new lows, a red flag for metal-based businesses. If you're exposed to metals or commodities, now's the time to reassess your portfolio. On the flip side, FMCG and rural-focused stocks are safer plays. They're less vulnerable to international shocks. Plus, with crude oil prices dropping and the rupee gaining strength, India's economic outlook is better than most. Yes, the world is messy right now, tariffs, protests, inflation, you name it. But remember, opportunity often hides in uncertainty. Stay cautious, stay diversified, and keep an eye on sectors that benefit from global disruption. We might see a market rebound soon, but timing it right will be key. Like, share, and subscribe for more market insights. And drop a comment. Are you buying the dip or staying on the sidelines?